Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everyone. Welcome to this Friday edition of Benzinga's Pre-Market Prep. I'm Spencer Israel, here with Dennis Dick and Joel Elconin, still in Chicago, but show must go on, so we're going to do it today. Dennis, myself, and our guest, Paul LaMonica, will join us at 8:15. He's a digital correspondent, CNNMoney. But aside from Paul, we're probably going to have to talk about the little North Korean missile we had yesterday. It doesn't move the market. We don't seem to care. A lot of stocks breaking out technically yesterday, so we're going to talk about that as well. We'll, of course, take your questions in the chat. Dennis, how's it going today?
I'm kicking around here looking at it quite quiet last night, though. You're right, Spencer. It got hit pretty hard as another missile launched over Japan. What's the story there?
Story is another missile launched over Japan.
I took it from you.
Yeah. No.
What are your thoughts on this?
I don't know. You know what? I was actually leaving the office and I saw a headline and I ran back to my computer to read up on it. But I think I read it landed, 200 miles off the coast of Japan. Someone on Reddit had a very nice timeline. Someone in Japan had a very nice timeline of what had happened. But apparently it got there. It got from North Korea to Japan in like something ridiculous, like 6 minutes or something. I don't know. It was ridiculous. But my thoughts are, I don't know.
Big middle finger once again.
I don't know what my thoughts are, honestly. I have no idea.
Big middle finger. That's what it is. It's like, oh, you're going to do sanctions and stuff. You're going to, threaten us. Well, here's what we can do. Watch this. We'll just throw another missile again. So it's just it's a little bit of a bluffing game. It's a little bit of a tough guy game right now. And, that continues here. So, it spooks the market every time that happens, though, because we sold off fairly significantly again last night. We sold off 6-7 points. If you look last night, Lockheed Martin started catching a bid. General Dynamics started catching a bid. I don't know if we're going to see this every time they launch, for at least in the after hours. But like we said, the market shrugs everything off. And even though gold was rallying last night, even though the S&P was getting hit a little bit, and even the defense stocks were rallying, the trade, is not really continuing here this morning because gold is sold off now and the S&P futures are all the way back up. So I don't know what to say, Spencer. It's it's a tough guy act over there, and it continues.
Yeah, you know what? I just put up the Lockheed Martin chart. This is an interesting one. Yeah, so the trade doesn't even last until the morning.
No, it doesn't even. The pullbacks don't even last till the morning now. They're coming in overnight. I was buying last night too. I was coming in and buying some different stuff last night as well, as I thought it was getting overdone. So, I wish I would have been buying more, but. And if you're looking this morning and if you're confused and you see the SPY way down, remember the SPY and all your spiders are ex-dividend here today. So the adjusted close, if you're looking at SPY and you're not looking at the S&P futures, you might be saying, oh, we're down significantly. We're not. The SPY, it closed at 250.09. The adjusted close is, I don't have it in front of me, but it looks to be 248.85-ish. So yeah, 248.85 and change. So we're actually only down at 10 cents on the SPY, which is, equivalent to about one S&P point. So we've come all the way back up.
And then also today is options expiration.
It is. An option expiration we know can have a little bit more volatility at the open and at the close. You see, some more violent moves in individual stocks as you have institutions jockeying their equity positions against their option positions. So, we see this at the open. We see some volume at the close. That being said, a lot of fun things, happen sometimes. And then, a lot of times, at least in the last couple of years, it's crickets. So, it used to be my most exciting day to trade. And I've obviously been trading 18 years. This was one day every month where I was like, okay, there's going to be some major action here. And now it seems like it's one or two of these, option expirations a year that have some pretty good action. And, the other 10 are crickets. So we'll see today if we get some action off the open or off the close. But it's been quiet on option expiration. So maybe we're due for some volatility off of our third Friday. And our third Friday is early this month, September 15th. So it snuck up on a few people.
All right, well, we can only hope for that. Let's get to the one earnings for the day. Let's start off with that, and then we'll go into a lot of the technical movers we had from Thursday. But Oracle reported yesterday after the bell. Q1 adjusted, and pull up the chart here, but Q1 adjusted EPS of 62 cents versus a 60-cent estimate. So that's a 2-cent beat. Sales of $9.19 versus $9.03 billion. So they beat on that as well. And then from the conference call, they see their Q2 adjusted EPS at just about in line, or the estimate
a little to the lower end.
To the lower end. To the lower end. To the lower end, sales growth 2 to 4% is what they see.
I guess you got to listen to those conference calls there. I didn't have it on last night. And I regret not having it on because Oracle was trading about flat, and then they came on and they gave that guidance. I think it was 64 to 68, wasn't it, Spencer?
Yes, the estimate was
and the estimate was at 68. So like, oh, that's light, and they hit the stock from like 52.5 down to the 49 handle. It did bounce, and it has bounced, trading at 50.80 here this morning. But this stock was all over the place. Made a high of 53.97 right on the initial numbers, as those numbers beat on the top and the bottom line. Then they hit it a little bit, and then it was just hanging out. And it was hanging out, obviously, there until the conference call when they gave the guidance. The guidance was a little bit light, and then they slammed it. Slammed it down to 49.5. It's at 50.5. I mean, now you're kind of in the middle. I don't have the overall trading range from last night there. You're trading 50.79. I think you probably got some support at the whole number of 50. Major support down there at the double bottom of 48 in August. I don't think we're going to get there today. And buy the dippers always seem to lurk in Oracle there. It's a stock that even if they disappoint, sometimes it gets hit. But, when the dust settles, I always say this about Oracle, it seems like 2-3 months later, it's back up near the highs. So one of those honey badger stocks that's making up this honey badger market.
Any sympathy plays with regards to Oracle?
CRMO is your direct sympathy play. And it is trading down slightly in the pre-market as well. It was trading down the lower 94s, actually to the $94 even mark last night. Is offered at 95.30, traded an odd lot at 94.93. So it'll probably be down a little bit in sympathy here today with Oracle. And then Workday, you can think WDAY is another one that sometimes moves a bit with it. But when I think Oracle, I automatically look at CRM because that's your direct sympathy play.
All right, let's move on to there's a lot of technical movers, just stocks moving technically yesterday. Dennis,
I was calling this going to be like Technical Friday because we got, I was looking at some charts and looking at a lot of charts on stocks that I was eyeing up, and a lot of different stocks looking like they're going to break out or did break out. So like that Bluebird Bio, remember we talked about that on the show yesterday. I specifically said Juno went. Bluebird could possibly go here too. I said it on the show, and it's 126. Bluebird blasted off to 136 yesterday. So 10 points we're giving you here on the show, guys, on Bluebird Bio. Did pull back, did settle over 130, 185, but that's showing life. Obviously, it's pulled back to the area where it broke out from, but the 136 was a nice pop for it yesterday. But that was yesterday's news. There's a lot of stocks that are setting up a little bit for breakouts as well. I was looking last night at the charts of the solar companies, First Solar, CSIQ. Both of those companies had pretty good days. So I was like, you know what? I might try to play this First Solar today. And then I come in this morning and Deutsche Bank upgrades it, so I'm already missing the move. So I wish I would have bought it yesterday at the close, obviously, because that would have worked out pretty well for me and with the upgrade. But now the trade goes, a little bit off because it's already trading up $1.50 here in the pre-market, and you do have that pesky double top in First Solar up there just around $50. So maybe that trade's not there. CSIQ still own that in my swing/investment portfolio. I put it in more for a swing, but I stuck it in my investment portfolio, so I didn't trade out of it. CSIQ trading up near the top of the range here now too. 1730 is where it closed yesterday. I know it just traded a little bit down at 17, but I wouldn't be surprised in the strength of First Solar. CSIQ shows some strength there today too, so that's an interesting one as well. Again, overhead resistance on that has been up around the $18 level.
Any particular reason you think for these breakouts?
Well, there is that, and we'd have to get Gordo. We're talking about Gordon Johnson on the show because there's some date coming up where there's going to be, some solar decision, and I don't follow it closely enough from a fundamental perspective to know when all these dates are coming, but there's some decision that's coming up. And I thought he said it was coming up sometime in the fall. I don't know if you have that.
You know what? Yeah, now that you mention it, I think he said it was September 20th. Let me find it for you because I do know what you're talking about. When he was on in middle August, right? And he said it was right around the time of his upgrade. And let me find it because I want to say it was like the September 22nd or something. But it wouldn't, whatever the decision is, wouldn't take effect potentially until like January or February. So that'll take some digging into by me, and I'm looking for it, and I don't see the exact date. So No.
In any regard here,
Yeah.
it's coming. So, that's something to keep in mind if you're trading any of these solar stocks. This decision is coming up, and that's going to be a game changer, either up or down for especially Canadian solar. Because I think Gordon Johnson was saying if the decision went their way, he could see Canadian solar up at $30. If it didn't go their way, he sees it a lot lower. So that's why he had put an upgrade, because he thought the risk return was there. But this decision is going to impact these solar companies big time. That's at least what Gordon Johnson was saying last time he was on our show.
Right. All right. What other ones you had a whole list of stocks that you
had. Big pharma barking a little bit. So we've had a lot of moves in some of the biotech stocks, and there's going to be some biotechs moving again today because RBC had an initiation on about 25 of them this morning. But the biotechs, the IBBs has kind of been hanging out there, just hanging. But it had a big run. But your Pfizers and your Mercks and your Lillys, those stocks have kind of been lagging the other drug stocks, and they always do a bit because they're the bigger ones, they're the more dividend type plays. They're not growing nearly as much as some of these smaller biotech companies, and they're not biotechs, they're doing, they're your classic pharmaceutical companies. But big pharma playing a little bit of catch up with biotech here last couple of days. Check out Pfizer. Pfizer has went from 34.5 up to 35.73. Big move for Pfizer. Merck as well. I own both of these in my investment portfolio. Merck finally showing some life, getting up here at 66.12 there yesterday with a dollar move. So, one thing to consider is Merck has a nice triple top around 66.38, 66.40. First time back up here, maybe that level holds. It's 30 cents above here, guys. So there's a tradable top there if you want to try to put something on. Again, if it takes it out, you at least where your out is. Starts trading 66.70, 66.75. I'd be covering the short. But, Merck is something, that's, an interesting setup because they have all those tops back from June.
And then Square was one that you had also discussed. Actually,
Square we talked about on the show too. I've been talking about this potentially breaking out. This is a stock that I wanted to have, and I was saying if it broke out through 28, I was going to buy it. I am long Square here now. I do like Square SQ. I think it's got the potential to go to 30. It's in breakout mode. This is an all-time high here for Square now. Twitter, obviously, I had that for a little bit. I've sold it now because I hit my target at 18. But I'm in Square. I'm hoping to hold it a little bit just because I think it has the potential to go to 30. So Square is a nice setup. CELG also, I own this one in my investment portfolio, but I like it for a trade now here too. It's been just hanging out here for a while as well. If it can get above the high of 142.64, I'd be in breakout mode here too. RBC did make it their top pick here overnight, put a 175 price target on it. But I don't know if I'm going to strike on this one until it actually does do in the breaking out, because you got 3-4 highs right around 142.30, 142.30, 142.64. So there's some overhead resistance there. If it can get above those highs, then it's in breakout mode again. But remember, a breakout isn't a breakout until it actually breaks out.
I'm getting text from Joel telling me to call him. He has something to say, but we got to call Paul and Monica. So Dennis, what do? I think I'm going to call Paul and Monica. I think that's
Joel, you're for Joel.
All right,
something to say. Well, can we can't call both?
All right, okay, we'll be right back. I'll call Joel and I'll call both of them, and we'll be right back with Paul and Monica. He's a digital correspondent at CNNMoney. And I guess Joel Conan will be back with us. So bear with us. We'll be right back. Welcome back, everyone, to Benzinga's Pre-Market Prep. Spencer Israel here with Dennis Dick. We're joined now by a couple people, Paul LaMonica from CNNMoney, and then Joel O'Connor calling us from Chicago. Joel, what's going on?
Doing stocks and jocks here, having a great time. Two things real quick. Folks, keep an eye on that triple top at that from 95 to 96.5. That's held up the last three sessions. We're knocking up there a door once again. So keep an eye on that. Not calling the top, but you got to pay attention to it. And also, Dennis, I met a guy that can convince you that you're going to be trading futures soon. So I just wanted to be prepared. Yeah. This guy's amazing.
He wants to get me back in the futures game. I gave up futures for equities.
Okay.
I'm done with futures. I don't even get futures quotes anymore, Tom, because they're too expensive.
Because you're too cheap.
I can't buy futures quotes because they want to charge me $600 a month for them. So that's what you go tell them. When they lower the quotes cost, maybe I'll start trading them again.
Joel, look what you did. Look what you did. All right, Joel.
Round me up already. Now you get Paul on here.
Right, Paul
will be one enough too. Paul, how you doing?
Yeah, I'm waiting for the futures discussion to end, and then I'll wade in. Thanks. Yeah.
This is an equity show, so we're done talking futures here. The quotes are too expensive. We don't talk futures. Anyways, Paul, how you doing?
I'm doing fine, thanks. How are you guys?
We're doing well. We're doing better than Equifax because EFX
That's
just
a
goes
low
down.
bar.
It just goes a low bar. It goes down like $10 every day here. What's going? Well, why do they keep hitting the stock, Paul?
I think it really is a testament to the fact that this security breach hits home for so many consumers. I mean, when you think of having your credit information potentially being out there for others to see, and the possibility of all the malfeasance that could be created or that could damage your credit reputation. I understand why people are nervous. Consumers are nervous. There's a lack of trust, I think, in the company right now. And also, this is a testament to, how not to handle crisis management. They waited so long before telling people. You had insiders selling stock. And then, what's the CEO's big, bold response? I'm going to write an op-ed in USA Today. I mean, come on.
Yeah, and obviously they didn't handle it well here. And just look at the stock, and now they've hit it down 50 points. Is it too much though? Like you had Evercore coming out here just 2 days after the incident when the stock was at 120, and they said it was a buying opportunity to buy it aggressively. I mean, it's down 25 points since that analyst made that call there. Now, is it time to buy it now? Like, is it overdone here, or do you think there could be more downside? I know you're not, a trader here, but
no, fair enough. Yeah. It's a legitimate question. I would be nervous, though, just because you have so much of, so many concerns about what's going to happen in Washington. I mean, you're going to likely have congressional hearings. The FTC has taken the unusual step of confirming that they are going to be looking into this, and they usually don't comment on actual investigations as they're going on. So that, I think, is a negative sign. And the price targets are going lower and lower, even though they are still well above where the stock is. I mean, when I wrote a piece about this yesterday, the lowest price on the street was 115, which is about $20 higher than where the stock is now. I'm seeing lower prices of about 110, but that's still, we're talking about a stock that's already fallen to 95. So many people have missed the boat on just how sharply this stock would fall.
I mean, there's a point there. If there's a lot of analysts with their price targets out to lunch, some downgrades are probably coming, and that could put more pressure on the stock as well. We have an acronym for that on the pre-market prep show. We call it ACP, Analyst Chase Price. And a lot of times you see a big move, the analysts will be coming in, and that will continue the move down. So that is a great consideration there, Paul. What about the cybersecurity stocks here? Are they a play off of this? Because FireEye has shown a lot of life here in the last few days since the ZFX has started here. You could look at, CyberArk. You can look at Palo Alto Networks. There's a few of these players in this industry that, benefit from security breaches.
Yeah, there's a couple of ETFs as well. Hack, the appropriately named one, which owns FireEye and Palo Alto. Some of the other ones, there's a a cyber ETF, I think, with the ticker symbol CIBR. Also, the one thing that I would just be wary of is that we have had high-profile security incidents for a couple of years now. Of course, you've got the Target data breach. You saw what happened at Yahoo. These companies, there are lots of cybersecurity companies. Not all of them do the same thing, and not all of them are profitable. FireEye is a company that has historically, disappointed Wall Street, even though you would think that they should be a firm that would benefit from the fact that seemingly everything is getting hacked. But you want to take a look at a 5-year stock chart of FireEye, you'd think that everyone is safe. I mean, It's ugly. And that's obviously not the case that everyone's security is safe online. It's just that just because we have all of these cyber hacking, breaches and incidents, it doesn't mean that buying the companies that purportedly can help protect your information and help companies, not have as bad of these breaches, that they're not necessarily all good buys.
Paul, my understanding was that Equifax had blamed this hack on some third-party software that is also used by a bunch of other firms: Citigroup, Lockheed Martin, Vodafone, Showtime, Virgin Atlantic, to name a few. Why aren't traders hitting those stocks? They use the same software that Equifax used that got hacked.
Well, I mean, you mentioned a couple of companies there. I mean, obviously, if it's true that Citigroup is affected, that is a big concern. I mean, I'd be less worried about something like a Viacom and a Showtime, or CBS, which owns Showtime, for example. But it really hits home that Equifax's business model is to provide credit score information to potential lenders. Trust is really part of their business, and I think they've lost it. And I think that's why that stock is being hit so much harder than others. I mean, it's one thing when even a retailer like Target, which has eventually bounced back from its big hack, it's not the business model to protect consumers or come up with information that that needs to be kind of safeguarded. And I think that's the big reason here.
Paul, what about the overall market? We get another missile comes out there last night, and the market sells off a little bit. But this morning, even gold rallied a little bit last night, but this morning they just shrug it off here again. I mean, the S&P's got all the losses back. Gold's actually trading down here. I mean, there's some scary things out there. It's for the market to worry about, but it's just not worried about any of this. I mean, a potential nuclear war. Here we are making new all-time highs yesterday, and we've got, a 33-year-old kid controlling, some major nukes over there, throwing them and launching missiles over Japan. It sounds pretty scary from a logic perspective, but the market's just not scared. Why do you think that is?
Yeah, I think it is a little disconcerting that the market is brushing this off to the extent that it is. But I mean, I think right now, you still have an expectation of decent corporate earnings. Consumers seem to be spending, and I think that the threat of North Korea is still somewhat abstract for a lot of people, and then I think many Americans don't really believe that there's going to be any extended military conflict. And then when you look at some of the other concerns that maybe people should have about the market, when you look at what's going on in Washington, that's a bit of a tough one. I mean, you could argue that there has been little to any progress on the Trump agenda that Wall Street loved, after the election and earlier this year. But by the same token, even though President Trump may be alienating some of the people in the Republican base by moving to a little bit more of a centrist, cooperating with the Democrats sort of philosophy, if he actually can get something done, that's probably better than just pandering to his base and getting nothing done, I would argue. And I think the market might feel that way too.
All right, Paul, what else is sort of in tech? Actually, I want to ask you about a lot of negative headlines we've seen in the past week or so with regards to Facebook and Google. I'm sure you saw the story about there's of course been the story about the Russian ads on Facebook, and then there's
Yep.
more ad troubles for Facebook, and they're overstating their metrics, and Google is firing people who come out and say things, and negative headlines surrounding both companies. What is your interpretation of all that?
I think the issue at Facebook is potentially a bit of a problem. I think that you do have to worry whether or not Facebook is having too many ads on its site that they're slow to get off, that would be considered objectionable, and that could be a potential problem going forward. But I think for the time being, Facebook and then Google, because of the platforms they own beyond their core business. I mean, you think of Facebook, obviously, with Instagram and WhatsApp, and Google also having YouTube. As long as the eyeballs are still there, as trite as that may sound, because it sounds like I'm walking back into a 1998 time warp that we're monetizing eyeballs, but they command so much of the internet users' attention, be it on mobile or desktop. It's hard to dispute that. So I think advertisers are going to continue to flock to these companies, even though they have their individual problems. So that's something that I think investors may brush off unless it really looks like it's going to start to hurt earnings growth, which I don't think it is at this point.
But it's becoming clear that Facebook has no idea. I mean, they said that you could reach more millennials in the U.S. than the number of them who actually exist, right? So,
that is obviously a big problem. With Facebook seems to think that there are more people around than the Census Bureau does.
And they don't know. There's no transparency between who you can reach and who you can't reach, and all these people are funneling their money, their ad money, into Facebook only because they don't know any better. But as soon as they wise up, you have to assume at some point they're gonna wise up.
At some point, we need to have better metrics that advertisers will rely on. And yes, I think that could be a potential problem going forward once we see just how much, the real addressable market, if you will, for some of these ads happens to be. But, I think at this point, advertisers are still, more worried about missing out by not being on Facebook than they are worried about spending money that may not actually translate into meaningful revenue growth or earnings growth.
Last question, Paul, and we'll let you get out of here. But thoughts on the iPhone X or iPhone 10?
iPhone 10, I think obviously a lot of people are a little disappointed that it's coming out in November as opposed to September. A couple of weeks like the 8 and the 8S. It looks pretty interesting. I think there are a lot of cool innovations with it. But I think like Wall Street seems to be reacting right now.
All right, Paul LaMonica, he's a digital correspondent at CNNMoney. Great follow on Twitter at LaMonica Paul. Thanks so much, as always, for the time.
Thanks a lot. Have a great weekend, guys.
You too. All right, Dennis, 8:29 now. I want to ask you about Disney, because we did get a Trump tweet this morning about ESPN. They've been in the headlines for maybe not the most ideal reasons for them. And Trump actually tweeting this morning basically how bad ESPN is. Anything in Disney that you're seeing?
Well, stock is not really moving with that. I mean, it's there. It's, just trading flat here right now. That's what the overall S&P. I mean, a lot of these Trump tweets are ignored here now. And, it's not like he's saying, oh, I'm going to do something or I'm going to say something. So, it's not surprising here. Again, Disney's not responding to that at all. Full disclosure, I am still short Disney. I was shorted obviously from that 101 day, and obviously I had the comments from CEO, which helped my short. I'm sticking with it. I'm trying to stick with it here. So it was a swing trade for me. I had my target. I thought the stock could eventually get to 91. So I'm trying to really stick with this one here. But we'll see how it goes. Like I said, I covered half of it in the 96 handle. I don't know. Now I might have to, if it gets back down at 96 handle, I might be covering the rest of it. But we'll see here. Disney, I still think there's weakness here to follow. I just think a lot of the other media companies, have been hit a lot harder. They've given Disney a pass here. The comments coming from CEO, I don't see anybody, institutional money managers, jumping into this thing right away. That's why I'm sticking with my short.
How long do you typically hold on to your shorts? I know that's
no. I'm a day. So
that's what I thought.
I have 3 separate accounts. I have one that I'm day trading in. You know, that's just, you know, overnights trades, day trading, scalping more than anything. You know, I sometimes have those trades overnight. Sometimes I have them for a few minutes. Sometimes I have them for a few hours. Sometimes I have them for a few seconds. So, you know, that's where I do my active trading. Then I have a swing trading account where I'm just sticking stocks in there, where I'm trying, you know, I'm doing these technical setups that we talk a lot about on the show, where I like the thing. I like the reason I shorted Disney originally was I thought it had hung out too long between 101 and 103. It was looking heavy to me, and I thought there was an eventual down move happening. I shorted it. The down move happened 2 hours later. It was just pure luck because, you know, we had the CEO come out with comments that, you know, the earnings weren't going to look that great for next quarter. And we know the stock got hit on that. So, you know, that's what I have. It's really the only thing in my swing account that I have going right now, other than Square. I have Square that I said I just bought. So, and I think Square can go to 30. And then I also have my long-term investment account. And my holding period of my long-term investment account is usually years. So, like I said, I've had some dogs in there. I've had General Electric in that long-term investment account for the better part of 17 years, and I'm not even up on the stock because GE was actually $60 back in the day. I thought I was buying it cheap at 30. It's at 24. The only thing, like I said, is good when you've held a stock that long. It's paid you a 3-4% dividend over that many years. I basically got my money back out of the stock in dividends, if I consider it that way. But really, you know, it would have been, you know, a lot better investments than that. But you're not going to win on them all. Like I said, I have almost 100 stocks in my investment portfolio. MasterCard was a great one for me. I've talked about that on the show. I'm still in it. $16 is my, you know, average cost on that. It's 141. So, you know, that's a longer term holding period, you know, is my long-term investment account. So I try to keep it separate. You know, my long-term investment account, I literally don't even look at it for weeks on end sometimes. You know, I joked on the show the other day that I had this IXYS in my investment account, and I looked at the price of it. I was like, when did that get to 23? And it got taken over. And I didn't even know until a week later that the stock that I had in my investment portfolio got taken over. So that's how much I look at the stocks in my investment portfolio. I don't look at them much because I don't want to trade them. I have that trader blood in me, that scalper blood. And if I actually, you know, start looking at my investment portfolio or having it up on my screen all the time, I would trade out of these positions. I wouldn't be holding stuff and making, you know, gains like I did on MasterCard. So, you know, as a trader, that's always the thing you fight is psychology to trade everything. The only way I can do it is have a long-term investment account and a day trading account and not look at my long-term investment account. It allows me to hold positions longer.
Hey, Dennis, we did get an 830 number, and retail sales for August were not. So actually, they're not great. Retail sales for August down 0.2% versus a up 0.1% estimate. Core retail sales for August was up 0.2% versus up 0.5% estimate. So we had a week. Not moving. A weak number, but not.
It seems like we only move, you know, sometimes on the jobs number. Sometimes we don't even move on that. So, you know, the numbers just seem to be muted activity as of late. We did get all the imbalance data came out. Again, you can't look at imbalance data on the third Friday of the month because it's pretty much meaningless. Right now, they're showing huge buys across the board, but that can all change. You know, there's so many institutional players that are going to be coming in there on the open that, you know, even if you see something with like a million share sell or buy imbalance like Bank of America has right now, it doesn't mean it's going to open up. It doesn't mean that at all. It could flip to a sell imbalance, you know, just in the next 5 minutes as another big institution comes in. Too many big players. So, you know, all the other days, the morning opening imbalances mean something. On the option expiration days, the data is pretty meaningless. Because, you know, it can really fool you. You can say, oh, this market's going to open way up on all these buying balances, but there's always seems to be institutions that come in and pair them off at the last second, even if it looks like it's going to open way up.
All right, Dennis, let's parse through this massive RBC note from this morning where they initiated.
Man, you got the note in front of you? So obviously they didn't cover any biotechs.
No.
And they've initiated on every single stock.
Yeah, I've got the
I guess they hired a biotech analyst.
They must have. So I'm not gonna run through the whole list because there's like legit 50 names. I'll just run through the biggest names and we can parse through one by one. So I'm gonna start with outperforms, and Alexion, ALXN, is getting an outperform rating at $161 price target. Gilead outperform a $94 price target. Hey, ICPT, that one from a few days ago, outperform.
I want to talk that one.
Okay, let's talk about ICPT.
You want to know why? Look at the price target.
$244 is the price target on ICPT.
That's the only one that really stood out to me. So I read that RBC note, and RBC is not one of the most, it's Canadian banks, not that influential, and nothing against Canadian banks. It just doesn't move, stocks as much as, if it was Goldman or Morgan or Wells or JP Morgan. But, they do have some influence. But when you put a $244 price target on something, people take note. And ICPT is actually trading up $4 or $3.50 here in the pre-market. I'm not sure if there's other news there or not because it wasn't up that much before. But it is trading up here. Was trading up on that note last night. So that's a bold call right there. Outperforming. They put a $244 price target on $87 stock. And ICPT has been trying, to get somebody to defend it here because it's been going straight down. They had bad news there a few days ago. Stock has been going straight down ever since. So you get an analyst coming out defending it, and that's why you see it this morning getting a pretty good lift on this RBC note. That being said, I don't know if this is going to be one that, I'd be coming up here chasing at $3.50. There's a lot of people underwater in this thing, and probably a lot of people saying, ooh, I like, getting, back some of the money that I just lost here in the last few days. So what I will say is on ICPT, there's a lot of overhead supply, but does look like it's showing some life here in the pre-market because of that big price target that RBC put on it, $244.
The other one that got hit a few days ago was Sage, and that also gets an outperform rating today and a $117 price target from RBC.
Yep.
So
same story, getting a nice lift here. It's up $1 again. They're coming out defending it. It did get to a major support level, which is interesting. If you look back in May, we had multiple lows, 63, 64, 65. Well, yesterday we got down to 63.29, so almost right on the kisser. Actually, if you want to even get more specific, in May we had May 9th we had a 63.53, May 10th we had a 63.54, and then May 22nd we had 63.23, and yesterday 63.29. I mean, you're right there. That's 6 cents of that low. So, that's something technicians will look at and say, especially Joel with his numbers, and say, hey, that's, a level where this could bounce off of because that's where it got down to before. And then we always say price is memory because there's, if a stock trades there multiple times, people take note of that. And not only that, there's people that are invested from those prices. And, maybe that's an area where they may want to, look into doing some trading again. So you can have a reversal at a price like that.
Other names that might stand out in this note, Biogen and Clovis are both getting neutral or sector perform ratings here from RBC.
Yeah, and you know what? Okay, so one thing to say is on the RBC note is the bigger ones probably don't get impacted hardly at all. It's the little ones that probably get moved because some of these little ones don't have much coverage. So when an analyst does start covering them, then you can actually see a move. Can you just run through the list? Because there's like 20 of them of some of these smaller ones. And, just
Sure.
So if anybody's trading any of these, they know, this is a huge note, this RBC note.
Sure.
Like I'm telling you, there's like 30 companies.
You know what? Here, I'll just run through the whole thing. So here we go. Tesoro, TSRO, sector perform rating, $120 price target.
Just give us the outperforms. Don't give us, what?
Okay.
The one pet peeve I have, and not against you, Spencer, but it's the analyst. When they come out with a neutral, it's like, what are you telling me? When you're neutral or sector perform,
it is where it is.
I'm going to cover the stock, but I just think it's going to perform with the overall market. I have no opinion. That's basically what it is when you come out with a neutral. Well, why'd you go write a whole research note?
No.
If you're going to come out with a neutral anyways. If you want to downgrade to neutral, it's one thing. You want to upgrade to neutral? What do you want to initiate a neutral? It's like not telling me anything. Okay, well, you don't have no opinion of it. So why'd you bother writing the note then? I hate the neutral.
In this case, it's sector
perform. But don't tell me any neutrals.
I'm just going to say, in this case, it's sector perform. In this case, it's sector perform, not market perform. So it's going to perform with the sector. Fine. No more neutrals for you. ABEO is the ticker. Outperform rating, $23 price target. AGIO, Agios Pharma, outperform, $78 price target. ALDR, outperform, $17 price target. ANAB, outperform, $40 price target. ATNX, outperform, $35 price target. I mentioned Alexion, I think. Yeah. EXEL, $32 price target. I mentioned Gilead. ENTA, $54 price target. IMDZ, that's M as in Macy, $20 price target. FPRX, $41 price target. KPTI, $14 price target. MRUS, $28. I mentioned ICPT. I mentioned Sage. RARX is $21. PRTA, $87. I'm almost done, I swear.
There's a lot of them.
SGEN, $58. ONCE $100. And I think this is the last one. VRTX, I think I mentioned them, $175 price target, and that is it. So
wow, that's a massive amount of coverage there. So lots outperform. So those are valuable because you're giving an opinion on it. And when you're giving an opinion like ICPT, where you're saying it's going $244, that's a bold call. So that's a gutsy call. It's these neutrals that annoy me. But okay, so that's your, that's what the RBC note was. But there's a lot of other analyst action here too. Joel just texted me and he said GNRC getting upgraded by Bank America. Are you kidding me? Is what he said.
Yep.
I don't know if he's listening, but GNRC, I think he's saying that they're late to the party. I kind of agree with him here. I mean, GNRC has run from $36 up to 44. Maybe Joel, if you're listening, maybe they think there's some more hurricanes coming. Maybe they think the people are going to need more generators. There's going to be some more natural disasters coming here, and there is some action down there, obviously in the ocean there, still kicking around some hurricanes. So I didn't read the note. Maybe they're banking on more hurricanes, but it seems like GNRC only shows life usually when there's some type of disaster.
Hurricane season doesn't end until end of October, so keep that in mind. Okay,
another good month and a half of potential hurricanes down there. So one thing about GNRC is it didn't sell off. So, the one thing I will say is a lot of times you have the disaster, it runs up ahead of the disaster and then sells off after. Really hasn't sold off. We've had 2 hurricanes now. GNRC is holding the gain. So maybe the market knows there's going to be maybe some more hurricanes lurking in the future here. So GNRC is still showing some life. So I don't hate this upgrade as much, but I agree, Joel, they are late to the party.
You already mentioned the Deutsche Bank upgrade of First Solar. We have Longbow upgrading Wendy's to buy and announcing an $18 price target. There's one note I want to hit on at the end, the JP Morgan note. Before we get to that, though,
JP Morgan's busy.
Yeah, we have Macquarie initiating Pepsi at Outperform, a bunch of beverage companies, most of them outperform, except for Boston Beer, SAM, that gets an underperform rating. And then the last one again, so JP Morgan. So they are coming out with a note on the airlines. Here is what we got. They are initiating LUV. Southwest gets an upgrade and a price target raised to $66. It was $60, now it's $66. Everyone else, though,
upgrading LUV.
Everyone else gets a downgrade. So Spirit Airlines, American Airlines, UAL, all downgraded to neutral. The American Airlines and UAL both get their price targets lowered. American Airlines is now $53. It was $61, and UAL is now $68. It was $84. So let's start, I guess, with the upgrade, which is LUV.
When the big banks come out, you gotta take notes. So if I was to rank them, and this is just no random ranking there, I would say Goldman is probably your most influential. JP Morgan, Morgan Stanley, Wells Fargo, those Bank America, those are all right there. So they're, the big 5. You look at Goldman, Morgan, JP Morgan, Wells, and
Citi.
And Citi too. Those big 5, 6 banks, when those come out, you got to take note because they have so many clients. So these are going out to all those clients. There's a lot of them that just follow the research, and they say buy, they do. So, there's, that's the consideration here. And you were seeing big moves in all of these stocks here this morning. LUV is trading up 1.5%, but American Airlines with the downgrade trading down 2.5%. Save, I have that one in my invest portfolio. I wish I didn't. It's down 3% here with the downgrade. Thank you, JP Morgan. UAL down 2.6% here in the pre-market with the downgrade from JP Morgan. You got to take note on the big guns. A lot of times you can ignore some of the smaller banks, but when these big ones come out, the big U.S. banks, they move stocks.
And then someone in the chat, Spinner, mentioning JetBlue, which I didn't see in the note.
I don't think they had a ratings change. That's why. They had a price target move.
And JetBlue, Spinner says, is the worst performing airline for the last month.
Yeah, you know what? This is one, and a lot of these airlines, let's be honest here. These airlines have not been pretty. They've shown a little life in the last couple of weeks. But, really overall, they've been annihilated. If you think about, you just look at the overall sector here. Wasn't there an ETF like Fly or something? Or I guess it's not.
Jets.
Fly's at least.
Jets.
Yeah. Jets?
You're close.
Oh, there you go. You can talk about Jets. Jets.
He's been on the show before, Frank Holmes. The Jets ETF.
So anyways, you can see that's went from like $33 down to 27. So basically sold off 20% here in a couple of months. Showing a little bit of life. The airlines are showing a little bit of life. But I don't know. It's hard just coming here because the sector's in a downtrend, and we know this market's so damn trendy. It gets going in one direction, it's hard to break it. So I'm not sure I'm coming in here and just jumping in with two hands and buying airlines or selling airlines here either. I've got the Spirit Airlines in my investment portfolio. Like I said, I wish I didn't. I was too early on that one. But, LUV gets an upgrade, but it's kind of ran already. I mean, it's went from 50 to 55. Now it's upgraded here. It's trading 54.98. I don't know. I mean, it's overhead supply here because these things have been such a downtrend. So I think I'm still seller rallies in the airlines.
All right, moving on from that question in the chat from Downward Dog about ELLI. Let's look at that guy.
Eli May. I haven't looked at this one for a while. It's just been consolidating nicely. I mean, there is a potential here for a breakout if the stock can get above. And you can see, we got hit hard. I'm not sure what the news is. I don't follow the company closely. Back, obviously, in July. And then, we had the continued leak. And a lot of times what you see, and this is a good lesson here, is usually when a stock gets hit hard, it consolidates for a few trading sessions and then often continues to go down. And, that's why it's usually not the greatest idea to buy it on the first day. Think about it. The news is bad. They'll slowly come in, and it takes time for them to dump their positions. But now, we're quite a bit after that initial. We're 2 months after that initial hit, and we have shown some life here. So if I was, I'm not saying I am, saying if I was to take along here, you can kind of argue there's a little cup and handle forming here. Not that we're big pattern traders. JC Pretz was on the show joking about, shampoo patterns when you talk the Head and Shoulders. But, we're looking at a cup and handle is a technical pattern that a lot of people say is bullish. If you are going with that technical pattern theme, if the stock can get above all those highs it's been making in the 85 handle, I want to say if it can get above those two highs, 86.30 and 86.39, it could be in breakout mode and could have room to 90. Right now, it's still in the handle. It's still to be determined. Sometimes people like to strike early. Sometimes I strike early and say, it looks nice. If you are striking, I would say if it got below 82.76, I wouldn't want to own the stock. So in any trade, I always say on the show, you can put on any trade as long as you know where your out is. Am I out on this? If I'm setting it up for you guys, just setting up a technical trade, if you like the pattern, I would say if I'm buying it here today around $85, then I'd be probably having my out, like getting out and saying the trade isn't working at 82.76 and giving it room to 90. It sets you up almost a 2-to-1 risk reward ratio. So, there's the potential there for that to work. Other thing working against you is that was a down move. And sometimes, down moves, it's hard to get the momentum turned around. But this is trying to show some life.
I mentioned this on the pre-market show, Dennis. I want to ask you about Blue Apron. They had some very positive, or what would you expect, CEO comments yesterday, basically coming out saying that Amazon is not their competitor, and there was actually some supporting research, some analysts coming out and defending it. And it did rally a little bit on the news. I don't know if it's holding it this morning. Blue Apron, probably not.
We've had a month of not going down. That's the good news for Blue Apron. And it did have a decent yesterday. And you know how I like my 2-day move. So I had a decent move yesterday, pulled back. I mean, could you get back up there and test $6? Yeah, you could. But this stock is so hated. I mean, I don't see this thing taking off, to $9-10 anytime soon. Competition, even though if they're saying it's not from Amazon, the competition in this industry is intense as well. So don't kid yourself. $4.99, it bottomed at $5. I mean, that's any time, in this stock, if you're buying it here, if it gets and cuts below $5, I don't want any part of it. If you're saying, okay, well, I think there's some life here, I think we could maybe make eventually a move to 6 and then potentially 7, then, maybe there's a potential for a trade. I'm not participating in this one, though, just because I don't like the story.
All right, 8:49 now, about 10 minutes left in the show. What else is on your mind today, Dennis?
What lots always on my mind. Sometimes, sometimes
I meant with the market. Stuff, I meant with the market. I don't care. I don't care about Connor McDavid or any of that.
What about those moves down in the rental cars yesterday? We talked about it, and I was actually saying I kind of like those downgrades, and I was thinking that they could be followed through. So we got that one right there too. We've been calling a lot of stuff right lately. We've been on a little hot streak on the show. But anyways, Hertz, HT Zebra, and Car CAR. Both get hit hard yesterday. Who was it that downgraded yesterday? Honey Badger, my goldfish memory here not serving me well. Spencer, who was the analyst that downgraded
Morgan Stanley.
It was Morgan. Like I said, you got to take note when those big guns, come in and give their opinion. These things got hit pretty hard yesterday. So you look at it now and you think, okay, well, Hertz dropped a lot yesterday. Was it too much? Maybe, but it's getting a little lift here in the pre-market. But I think the uptrend kind of broke yesterday on both these stocks. So if they get some rally in the next couple of days, I think they set up for a short opportunity. So I think the top is in and the short-term top is in car. I don't like I said before, I don't like the story on either of these. I think there's Uber. I think there's so much competition coming in. There's so many people doing different things and not renting as many cars anymore. And that's why I think, this rally that was in car and Hertz was a gift. I think it was a gift for the last couple of months. I think it was, mainly from a short squeeze. And I do think eventually these stocks could go down and test those lows again. And, when you're talking Hertz, you're talking about a low where the stock got down to all the way down to, $8-9. So there's a lot of meat on this bone again. And that being, but the one concern is, sold off $3, sold off 15%. You're kind of shortening the hole now. That's why I would love to see a little rally, and maybe get back in the 22s just so I could throw a short on. Definitely not buying it here because I think there could be more downside, but I'd love to see it get back in the 22s or even the 23s just to try a lower risk short because my out would be those couple tops at 24.13 and 24.22. Sorry, Icon. I know you still own it, but I don't like your stock.
Doesn't he own doesn't he own like half of it or something at this point?
Probably. He probably, you know what? It sold it. Maybe. Carl's one of those old, he doesn't like selling at losses. He does this, and he's got, deep pockets, so he can hold things a long time, a lot long. He's got a lot deeper pockets than I do, so he can hold things a lot longer than I can. That's why, with me not with the deep pockets that Carl has, I have to have an out. I have to know where I'm going to cut my loser because I can't hold things forever because I don't want to lose all my money. So we know Carl, he don't mind. He'll hold the things until, forever and ever. He's probably held some stuff to zero. He won't tell you about that stuff. But, Uncle Carl doesn't like to sell at losses. So if Hertz came all the way back to his scratch price, though, he might have been selling it. So who knows?
All right. What about NVIDIA? Getting I love outlandish. I love big price targets. We got a price target this morning from Evercore of $250 for NVIDIA. I haven't looked at this one in a while, I feel like.
I think it's ready to go.
Oh,
you know what? This morning I'm going to say right now, and obviously it's popping here. It's popping big time already here. But I wish we would have looked at this chart yesterday. I would have said the same thing because I actually hadn't looked at where it was trading when I just said that. Now I see it's up 172. But this stock's ready to break out. This has been consolidating for a long time. If you look at like AMD, it's significantly off the highs. If you look at some of the others, they're significantly off the highs. This doesn't want to sell off. And, we had some reason to sell it off because some of the momos got hit. Amazon, these have nothing to do, but they all back in July and August. You can look at Google, it got hit a little bit back in July and August. Even Tesla got hit, back in July. Really, NVIDIA has really held on fairly well. I know it got hit a little bit on its earnings report, but it bounced right back 2 days later. The stock looks ready to go. I think the stock could be $200. I don't know about 250, but I think this could challenge 200, maybe even by the end of the year.
What makes you say that? Like what in the chart makes you say that?
It's consolidated for so long. So here's bring up the monthlies. Here's a long-term cup and handle for you. Look at June. You could say, when June, when we got up to 168, we made the little top left, part of the cup. And then, it kind of, went down to the 140 area. And then you've been consolidating for a long time. I can just see kind of a long cup and handle pattern there. That's a long time. It's been consolidating for too long. It wasn't going down. When stocks don't want to go down and other stocks in the sectors were going down, it makes me think that this is going to be the leader and this is going to be the one that wants to go when, eventually the market's been consolidating for a few days here, but I still think, we're coming in. I don't see any reason, unless we have a nuclear war, I don't see any reason for the market to sell off anytime soon. I'm not saying that's not a possibility. Always be prepared for everything in the markets because we've got a lot going on there in North Korea all the time. So you got to be somewhat cautious with all your long positions. But if the market continues to grind higher, I think NVIDIA is going to be one of your leaders, and that's why I think it's ready to go.
All right.
I like it. I like the NVIDIA chart.
And then AMD, that moves in similar.
I still like 12, but it's stuck down here for so long. It's not showing as much life as the NVIDIA here, which is concerning here. But $12. You've gotten out here tradable bottom too. Multiple times the stock's bottom just below $12 and bounced out of there every single time. It's on a 1, 2, 3, 4. Basically 5 times we bounced off 12. Can we do it the 6? We're down here. We got down to 12.11 yesterday. Sure, we can. So, you got a tradable bottom there. I'd say if it cuts through the lows at 11.86, I probably would get out of that trade. But, if you think NVIDIA is going to go, AMD probably follows suit.
All right, 8:55 now, a few minutes left. We'll take your questions in the chat. I've seen some tickers there from Stock Hunter on LIT and Tesla. What are you saying, Dennis?
They got tickers coming all over the place there in the chat.
Yeah, we got LIT, we got Tesla, ALB.
LIT is monster. Lithium, if I believe in the electric car, I guess lithium's going to power all this. This has been from $17 back in just February of this year. It's over $37 here now. Again, I don't like chasing stocks. I feel like you're a little bit late to the party here on LIT, but you can't argue with the trend. If you're in it, I guess you keep riding the trend. What else you got for me?
Well, let's stick with Stock Hunter and let's go over to Tesla.
Showing a lot of life here again. I had a great day yesterday, breaking out. Now you're within striking distance of the all-time high. Whether you hate the valuation or, which I've hated the valuation forever, you can't argue that this stock is resilient. Some people think, this is the whole future of cars, and a lot of people argue it's not just a car company. It's a technology company that's doing a lot of different things. So this is showing a lot of life here again. I'm just, if it takes up to 386, it's probably going to 400. So I'm not participating in it just because of the valuation scares the hell out of me. But congrats to the people like Jason Raznick who's had this for a while. And
he mentioned Stock Hunter is breaking out.
Yeah, these are all plays on the same thing. ALB here is looking good too. This was stock here this morning. This is putting a triple top 126.32, 126.20, 126.15. This sets up very well. We're bid up here this morning. I'm not sure if there's specific news on ALB or not. I know it was trading up $3.50 at one time, so maybe there is some news on this. This is in breakout mode here. This chart looks great as well.
Dr. J asking about Amgen. I think they were one of the sector performs this morning from RBC. They were. So
triple top in place, 191 from the last 3 days, 194, 190.94, 190, 110 from yesterday. Needs to get above that area. If it can get above that area, the run continues in Amgen. Want a fast market, Spencer? Keep throwing me the tickers.
Okay, I got you. BLCM from Spinner, early stage bio company in the same space as Kite and Juno. BLCM.
Up 50 cents here in the pre-market. I'm not sure if did this come from RBC or was this other news here? Because it's trading up 5%. Got to be some news on it.
No, they're not in the RBC note.
Is there any news from the pro?
Not that I'm seeing, no.
Okay, anyways, it's trading up 60 cents in the pre-market. It's getting above its little area of resistance there, which was 11.33. Can stay above that area. Could be in breakout mode again. You had a run here from 7 to say that 11.33, then you had the little pullback, consolidation, and the move. This sets up well again too. I'm not sure what the news is, but I wouldn't be surprised if it's trying to challenge $12 or $13 here. Chart looks good. Why does charts look good?
Qualcomm. What?
They do. A lot of these charts just look good. I'm having trouble finding bearish charts. Maybe there's a method to the madness here behind the S&Ps keep climbing all the time. The look good.
Maybe BTFD works after all.
Qualcomm's a dog. It's been a dog for a long time. It's one, that, I look at that 4.4% dividend. I lick my chops, and then I'm thankful every time that I haven't bought it yet. Every time this seems to get a pop, it seems to get met with more sellers here, showing a little bit of life, but I don't like this one nearly as much. 52 looks resistive, and you just have a lot of overhead supply just because there's been so many people that have been losing money on this stock. So it's a dog. I think it remains a dog.
All right. Last one we'll get to is PBI.
Let's check it out. PBI. Oh, this one's interesting. This has been hit hard. I don't follow this company at all. I know it. I've traded from a fundamental perspective. So speaking purely technicals here, stock got hit hard. Been a long consolidation period. Go with the winner is what I'm going to say. If this thing trades and gets above 13.03, which was the high, basically the high for the last month and a half. If you can get above there, about getting up there and starting to fill some of that gap. If it cuts below the lows, which are 1240, there's multiple lows, 1241, 1240, 1243. Cuts below 1240, I don't want any part of this. And then it could, be a continuation of its original move, and this thing could go to 11 or $10. So I would say it's right now still to be determined. It's in a sideways market here right now. If it gets above 1303, get a close above that area, maybe it shows some life and gets a run. If for whatever reason it cuts below 1240, I think it's a short.
Let's do one more from Downward Dog. Juniper.
JNPR. Showing some life. You know what? I don't mind that. That's actually showing a little bit of life here. I always like to look at Cisco too, because Cisco's your leader here. And the Cisco chart, CSCO, really is showing some life as well. This Cisco sets up not bad. I mean, if you think, we're going to eventually get into the last quarter, and sometimes that shows some strength, and, and eventually into November and December, and, have a Santa Claus rally, and if you think there's not going to be a nuclear war and this is just a resilient market, Cisco sets up not bad too. CSCO, if it could get above 3250, gets in that gap area, could run. If it runs, Juniper often follows suit. But Juniper's been in quiet consolidation for a couple of days here as well. And it's showing some life too. You had this breakdown day back on September the 8th, which when it got down to 2650. That was kind of a fake down because it got right back up over it again. You might have caught a few people shorting it there on that breakdown. And maybe there's, don't want to cover. So I don't know. I kind of like the Juniper chart. I don't know why. I just feel like this thing could run.
All right. That's it for pre-market prep this week. Hope you enjoyed all of our shows. You can catch them all again on iTunes, SoundCloud, and Stitcher by searching for pre-market prep, or by going to youtube.com/Benzinga TV to catch all of the shows as they aired live in the morning. Again, premarket.benzinga.com. That is the site for that's where the show airs. That's where our live chat is as well. Tune into that every morning for the show. And then pro.benzinga.com is the URL for Benzinga Pro. It's what Dennis and I use during the show to figure out what the news is as it's happening. Don't forget about the Benzinga FinTech Summit, September 28th, which is just about 2 weeks away now, a little under that, in San Francisco. bzsummit.com is the site for that. So have a good rest of your day, folks. Hope you all have a good weekend. We'll be back with you with Joel on Monday. So have a good one, everyone.